Ahoy there, fellow crypto explorers, ready to navigate the sometimes turbulent, always fascinating waters of digital assets.
Aye, aye, Captain. Today we're charting a course through the evolving regulatory landscape of 2025, focusing on the EU's MICA, or Markets in Crypto Assets Regulation.
We've got our charts and compasses ready, a treasure trove of expert analogies, regulatory documents, and even a few surprising news headlines to guide us.
It's a voyage no crypto enthusiast should miss, especially given the market's rollercoaster ride over the past few years. Remember the boon of 2021.
Oh, who could forget? Everyone was talking about Bitcoin reaching the moon. And then, almost as quickly, came the crash of 2022.
Giants like Terra Luna and FTX crumbled, sending shockwaves through the entire cryptosphere. Yet, even amidst the wreckage, signs of recovery began to emerge.
It's true, the market's been showing remarkable resilience, wouldn't you say? And a lot of that renewed confidence stems from the growing interest of institutional investors.
Precisely. The approval of Bitcoin and Ether ETFs in the US back in 2024 was a major turning point. It's like the traditional financial world finally started taking crypto seriously.
A real stamp of approval. But this renewed interest, coupled with the inherent volatility of crypto, brings us to the critical need for clear regulation.
Exactly, and that's where the EU's MICA regulation steps into the spotlight.
So for our listeners who might be new to this sea of acronyms, what exactly is MICA?
Think of it as the EU's comprehensive rulebook for the crypto world, aiming to protect investors, ensure market stability, and prevent financial crimes.
A lighthouse, guiding ships safely through potentially treacherous waters.
A very apt analogy. Now, MICA casts a wide net covering a diverse range of crypto assets, but there are three main categories to be aware of.
Let's break them down. First, we have ARTs, or asset reference tokens. Those are essentially stablecoins, right?
You got it. ARTs are pegged to a basket of assets, offering stability against fluctuations in any single currency. Think of them as a more diversified form of stablecoin.
Interesting. And then there are EMTs, electronic money tokens. How do those differ from ARTs?
EMTs are stablecoins linked directly to a single fiat currency. Picture a euro-backed stablecoin, for instance.
Ah, I see. So they're kind of like digital versions of traditional currencies. And finally, we have the more familiar crypto assets like Bitcoin and Ethereum.
Precisely. Those digital trailblazers that paved a way for this whole ecosystem. But it's also important to note that MICA doesn't apply to everything in the crypto sea.
You're right. Are there any specific exclusions our listeners should know about?
Absolutely. Traditional financial instruments already regulated by MiFID II, the Markets and Financial Instruments Directive, are not covered by MICA.
Makes sense. We don't want overlapping regulations causing confusion. What else is exclusive?
Most NFTs, or non-fungible tokens, fall outside MiCA's scope, except for those that function more like securities.
So those unique digital collectibles are generally given a pass. Anything else?
Central bank digital currencies, or CBDCs for short, are also excluded, along with crypto issued by public entities. And lastly, certain limited purpose tokens also fall outside MiCA's purview.
So MiCA really hones in on those crypto assets that could directly impact everyday investors and the broader financial system.
Precisely. And to ensure smooth sailing, the European Securities and Markets Authority, or ESMA, and the European Banking Authority, or EBA, are tasked with overseeing MiCA's implementation across the EU.
And here in Spain, we have our own watchdogs, right?
That's right. Spain's CNMV, the National Securities Market Commission, and the Bank of Spain will be keeping a close eye on things.
So for our listeners who are already navigating the EU's crypto waters, what's the timeline for complying with these new regulations?
Well, there's a transition period until December 30th, 2025 for existing crypto asset service providers to fully comply with MiCA.
So mark your calendars, folks. It's time to make sure your operations are shipshape and ready for the closer scrutiny that lies ahead.
Couldn't agree more. Now let's dive a bit deeper into those ARTs and EMTs we discussed. What makes them so unique that they warrant specific attention from regulators?
It's their potential to disrupt financial stability and monetary policy, isn't it? After all, stablecoins pegged to a basket of currencies or directly to a fiat currency like the euro could have ripple effects far beyond the crypto sphere itself.
Exactly. They could impact exchange rates, the effectiveness of monetary policy, and even challenge the sovereignty of central banks. It's a delicate balancing act.
And I imagine that's why the European Central Bank, the ECB, is keeping a particularly watchful eye on those ARTs that might pose systemic risks.
It's all about fostering innovation while safeguarding the broader financial system, a challenge many regulators are grappling with worldwide.
Speaking of the global regulatory landscape, how does MiCA compare to what's happening in other parts of the world? It seems like everyone's trying to find their bearings in this new frontier.
Absolutely. The EU is definitely a pioneer with MiCA, the first comprehensive framework of its kind. Other regions are taking different approaches. Japan, for example, has a more open stance, recognizing crypto as a form of money and property.
And South Korea has been actively regulating the crypto space for a while now. Didn't they implement their Virtual Asset User Protection Act back in 2023?
That's right, they've been ahead of the curve in many ways. Meanwhile, the US is still working towards a more unified and comprehensive framework.
It's a bit of a patchwork of regulations over there, with the SEC playing a key role, but a cohesive national strategy is still in the works.
It's certainly a complex landscape, which is why international cooperation is so crucial. Organizations like the Basel Committee on Banking Supervision, or BCBS, are working to establish global prudential standards for banks dealing with crypto.
Trying to create a more level playing field and mitigate risks across borders. It's like trying to herd digital cats sometimes.
It certainly presents unique challenges. But let's not forget about the positive developments like the surge in ETFs, or exchange-traded funds. Since the US approved Bitcoin and Ether ETFs, it's been like a floodgate opening.
It has. Last month alone, the SEC received a staggering 47 ETF applications spanning 16 different asset categories. We're even seeing ETFs for meme coins now.
It's a fascinating reflection of how the crypto landscape is evolving, blowing lines between traditional finance and what was once considered a fringe asset class.
But jokes aside, what's driving this explosive growth in crypto ETFs?
Well, ETFs make crypto more accessible to a wider range of investors. You no longer need to understand the complexities of wallets and exchanges. It's all packaged neatly into a familiar investment vehicle.
And that ease of access, coupled with the growing institutional interest we discussed earlier, is driving this surge in applications.
Absolutely, and it's almost a positive impact on market confidence as well.
I imagine so. Having these regulated investment products available makes the whole crypto space seem less risky, more legitimate.
Emma Pisanichik, Fidelity's expert on digital assets and wealth strategy in Asia Pacific, summed it up perfectly. She described ETFs as a game changer, bringing a level of legitimacy that's attracted serious institutional players and fueled market confidence.
It's like a bridge between the old and the new, the traditional and the disruptive. Now, let's turn our attention to Bitcoin specifically. It's been on quite a journey, from a fringe asset to, well, what exactly is it now? Digital gold, a portfolio diversifier, a safe haven asset.
It's a question that has sparked endless debate. Bitcoin, with its finite supply capped at 21 million coins, has earned the nickname digital gold due to its perceived scarcity.
It's like gold, it's often presented as a potential hedge against inflation and a way to diversify investment portfolios. But Bitcoin's volatility is undeniable. We saw how it reacted during recent geopolitical crises, experiencing significant price swings. Does that undermine its potential as a safe haven asset?
While Bitcoin is certainly not immune to global events, it's interesting to note that even though it tends to be initially impacted by crises, it often recovers faster than other assets.
So it's like a digital phoenix, rising from the ashes. That resilience, coupled with its decentralized nature and limited supply, contributes to its appeal as a safe haven, especially during times of uncertainty.
Precisely. As Emma Pisanichik pointed out, Bitcoin's low correlation with traditional assets like stocks and gold makes it a unique investment, potentially mitigating losses when other markets experience downturns.
It's almost like a different breed of asset, one that marches to the beat of its own drum. Now we've got this booming crypto industry, growing institutional interest, a push for regulation. But then we have this perplexing paradox emerging: debanking.
A rather curious phenomenon, wouldn't you say? We're witnessing a multi-billion-dollar industry struggling to access basic banking services. Legitimate crypto businesses are facing account closures, often without clear explanations or justification.
It seems counterintuitive. I mean, we're talking about a rapidly growing sector that's attracting significant investment. Why are banks so hesitant to engage?
It's a complex issue, but it boils down to a few key factors. Banks are often wary of the regulatory uncertainty surrounding crypto, the potential for illicit activities like money laundering, and the perceived volatility of the market.
So it's a combination of fear, risk aversion, and perhaps a lack of understanding about how the crypto world actually works.
There's definitely an element of that. And this disconnect raises a fundamental question about crypto's future integration with the mainstream financial world.
If crypto aims to be a truly viable alternative to traditional finance, this barrier to access needs to be addressed. It's like trying to build a bridge without any supporting pillars. So as we reflect on this first leg of our journey, what are some of the key takeaways our listeners should keep in mind as they navigate this evolving crypto landscape?
Well, first and foremost, MICA sends a clear message that the EU is embracing the transformative potential of crypto while prioritizing investor protection and market stability. It's a significant step towards legitimizing the industry.
It's like a signal flare, letting the world know that the EU is taking a proactive approach, not trying to stifle innovation, but to create a more transparent environment for everyone.
Exactly. MICA is about striking that balance between encouraging innovation and mitigating risks, ensuring the crypto sector can flourish within a well-defined legal framework that protects both investors and the integrity of the financial system.
So, time to batten down the hatches and make sure everything is shipshape.
It really does highlight the need for greater understanding and collaboration between these two worlds.
Right, because how can we expect seamless integration if we're not even speaking the same language?
Precisely, and that's where regulations like MICA come in, providing a framework for dialogue, setting clear expectations.
It's like a signal flare letting the world know that the EU is taking a proactive approach, not trying to stifle innovation.
Exactly. MICA is about finding that balance, encouraging innovation while mitigating risks.
Making sure the crypto sector can grow responsibly within a well-defined legal framework.
One that protects both investors and the integrity of the financial system.
Now, for our listeners who are already active in the crypto space, what are some practical implications of MICA they need to be aware of?
Well, as we mentioned earlier, the transition period until December 30th, 2025 gives existing crypto asset service providers time to fully comply.
So time to batten down the hatches and make sure everything is shipshape.
Exactly. They'll need to review their operations, ensure they meet the necessary standards for investor protection, data security, and transparency.
And be prepared for increased scrutiny from regulators.
Precisely. Now let's circle back to those ARTs and EMTs we discussed earlier.
Their potential impact on financial stability and monetary policy makes them particularly interesting.
Absolutely. The potential for disruption is significant. Imagine a stablecoin pegged to a basket of currencies becoming so widely adopted
that it influences exchange rates or even challenges the effectiveness of central bank monetary policy.
It's a scenario that regulators are understandably taking very seriously.
It's almost like a new current forming in the global financial ocean, one that we're still learning to navigate.
And it makes sense that the ECB, with its focus on maintaining financial stability within the Eurozone, is closely monitoring the development of ARTs.
Especially those that might pose systemic risks.
And let's not forget about EMTs, those stablecoins tied to a single fiat currency like the euro.
Their potential impact on payment systems and how we transact daily could be profound.
As adoption grows, it raises important questions about the role of central banks, commercial banks, and other financial institutions in this evolving ecosystem.
It seems that stablecoins in general are becoming a focal point for regulators worldwide.
They represent both exciting opportunities and potential challenges for the financial system as we know it.
And that's why robust regulatory frameworks like MICA are so crucial.
It's about harnessing the innovative potential of these new technologies while putting safeguards in place.
Now let's shift gears for a moment and address a darker aspect of the crypto landscape: debanking.
It is a strange paradox, isn't it?
This multi-billion-dollar industry teeming with innovation and potential struggling to access basic banking services.
It's a catch-22 situation that highlights a fundamental tension between the traditional financial world and the emerging crypto ecosystem.
Banks are often hesitant to work with crypto businesses due to concerns about regulatory uncertainty,
the potential for illicit activities like money laundering, and the perceived volatility of the crypto market.
But on the flip side, without access to banking services, it becomes incredibly challenging for legitimate crypto businesses to operate.
Exactly. It's a barrier to entry that stifles innovation and reinforces the perception of crypto as being on the fringes of the financial system.
So how do we break this cycle? How do we build bridges between traditional finance and the crypto world?
I believe education and dialogue are key. Banks need to develop a deeper understanding of the crypto industry.
The underlying technologies, the evolving regulatory landscape, and the legitimate players operating within this space.
It's about moving beyond the stereotypes and misconceptions that often surround crypto.
And recognizing that it's a diverse ecosystem with responsible actors who are committed to compliance and best practices.
And equally important, crypto businesses need to proactively engage with banks and regulators.
Demonstrate their commitment to transparency and actively participating, shaping a regulatory landscape that fosters innovation while mitigating risks.
It seems like a collaborative effort is essential.
It's not about crypto versus traditional finance, it's about finding common ground.
Building trust and working together to create a more inclusive and dynamic financial future.
Now let's turn our attention to another intriguing aspect of the crypto landscape: the rise of Bitcoin as a potential safe haven asset.
Yes, this digital gold narrative has gained significant traction, particularly after observing Bitcoin's performance during recent geopolitical crises.
Despite its volatility, it has shown a certain resilience.
It's a fascinating development. While Bitcoin is still a relatively new asset class, its decentralized nature, finite supply, and low correlation with traditional assets
Have led some to believe it could serve as a hedge against inflation, economic uncertainty, and geopolitical turmoil.
But can we truly label it a safe haven given its relatively short track record?
And its susceptibility to significant price swings.
That's a valid question, and the debate is far from settled. We're still in the early stages of understanding Bitcoin's role in a global portfolio.
And how it might perform during prolonged periods of economic stress.
It's an ongoing experiment, and only time will tell whether it lives up to the digital gold moniker.
Regardless of its ultimate fate, Bitcoin has undoubtedly sparked a crucial conversation about the future of money.
The role of decentralized assets in a globalized world and the evolving dynamics between traditional finance and this emerging crypto ecosystem.
Absolutely. It's challenged conventional thinking about finance, forcing us to reconsider long-held assumptions about money value and the way our financial systems operate.
And that's what makes this deep dive so fascinating, isn't it?
We're not just discussing technology or investments, we're exploring a paradigm shift that has the potential to reshape the financial landscape as we know it.
Indeed. And as we continue to navigate this uncharted territory, it's crucial to approach it with a blend of curiosity, skepticism, and a willingness to challenge our own preconceived notions.
Now, we've covered a lot of ground in this deep dive, from the intricacies of MICA to the challenges of debanking and the rise of Bitcoin as a potential safe haven.
But we've only just begun to explore this dynamic and multifaceted world.
And as we move towards the final leg of our journey, I'd love to hear from you, our listeners.
What aspects of this conversation have resonated with you? What questions are still swirling in your minds?
Yes, deep divers, we want to hear your thoughts. Are you optimistic about the future of crypto regulation?
Do you believe Bitcoin can truly become a safe haven asset? Join the conversation in the comments below. We're eager to hear your perspectives. It's fascinating to see how crypto is evolving from a niche technology to a force that's prompting us to rethink the very foundations of our financial systems.
Like witnessing the birth of a new financial era, one that's decentralized, transparent, and accessible in ways we couldn't have imagined just a few years ago.
And that's where the true potential of crypto lies, not just in its investment potential, but in its ability to empower individuals and create a more inclusive financial system.
Speaking of empowerment, let's dive into the world of DeFi, decentralized finance.
It's a movement that's gaining serious momentum, promising to revolutionize how we interact with financial services.
DeFi is truly a paradigm shift.
It's all about leveraging blockchain technology to create financial applications and services that operate independently of traditional intermediaries like banks.
Imagine a world where you can access loans, savings accounts, and other financial instruments directly without the need for a central authority.
It sounds incredibly liberating, almost like reclaiming control over our financial destinies.
But with this newfound freedom come new responsibilities, right?
Absolutely. Security is paramount in the DeFi space.
We've seen how vulnerabilities in smart contracts and the decentralized nature of these platforms can create opportunities for hacks and scams.
It's crucial for anyone venturing into DeFi to do their due diligence, understand the risks involved, and take steps to protect their assets.
It's a reminder that with great power comes great responsibility. We need to approach DeFi with a healthy dose of caution, just like we would with any emerging technology or financial system.
Precisely, and as this space continues to evolve, it's crucial for regulators to strike that delicate balance between fostering innovation and protecting consumers.
We need clear guidelines and safeguards in place to mitigate risks and ensure that DeFi can reach its full potential without compromising the stability of the broader financial system.
It's a collaborative effort involving policymakers, developers, investors, and of course informed individuals like our listeners who are actively engaging in this conversation.
We need diverse voices and perspectives to shape a future where DeFi can thrive responsibly.
Now, as we approach the final buoy in our deep dive, I'd like to leave our listeners with a thought-provoking question.
As crypto continues to mature and integrate with the mainstream financial world, what role will it play in shaping a more inclusive and equitable financial future?
That's a question worth pondering, deep divers. Will crypto bridge the gap between the financially underserved and traditional financial services, or will it create new divide?
How can we ensure that the benefits of this transformative technology are distributed fairly and ethically?
The answers to these questions will depend on the choices we make today as individuals, investors, policymakers, and members of a global community.
The future of crypto is not predetermined. It's a story that we're writing together one block at a time.
And as we wrap up this exploration of crypto regulations and trends, remember that knowledge is your most valuable asset in this ever-evolving landscape. Stay curious, keep learning, and don't be afraid to challenge assumptions.
And for those of you who are new to the crypto world, welcome aboard.
It's an exciting journey filled with possibilities and challenges. Take your time, do your research, and remember to invest responsibly.
That's a wrap, deep divers. We hope you found this plunge into the world of crypto insightful and engaging.
If you did hit that like button, subscribe to our channel for more deep dives into fascinating topics, and ring that notification bell so you never miss an exploration.
Until next time, keep diving deep, stay curious, and remember, the future of finance is in our hands. First 10 years to have that line.